We've all thought at one point, wow, I could really use some more money. You gaze into your financial future, and you realize that the thought of retirement is seemingly a long shot. The typical solution? I know. I'll just pick up more hours at work. Maybe get a second job. The problem with this scenario is that time is our most precious commodity. Whether it's to be spent with family, friends, you name it, time is limited, and time is precious. But so many of us completely waste it. Stop wasting your time, stop mindlessly picking up more hours at work, and be more efficient with your money. Okay, so how do we make more money? The number one way I'm going to suggest is by utilizing the stock market. The stock market is by far the number one tool for a lower to middle class citizen to grow their wealth. I've learned this firsthand with investments like Facebook, growing over 700% and covering all of my student loan expenses. Starbucks, growing over 120%. Visa, PepsiCo, PayPal, Trex, Alibaba, Activision Blizzard, and even AbbVie. The list goes on and on. All of these stocks combine to help grow my portfolio year after year. So now, hopefully at this point I have your attention. But what is Robinhood Strategy? Well, Robinhood Strategy is a low-cost investor's newsletter focused on building a top-notch stock portfolio. Everyone wants to have a top-notch growth portfolio, but not everyone necessarily has the experience to build one. That's where Robinhood Strategy comes into play. What began as an idea to help educate and guide investors grew into a service where we disclose all of our holdings, provide real-time buy and sell alerts, and email out a monthly newsletter tracking our performance and providing analysis. Our method of stock picking involves multiple steps, so be ready to take some notes. Number 1, we search for companies with an economic moat or competitive advantage. Number 2, we look for companies with top-notch and proven management, such as Ingenuity at PepsiCo or Jeff Bezos at Amazon. A lot of investors will pay a premium for a company and management team that has already weathered a recession. Number 3, does the company have a compelling growth story? Maybe accelerating revenue? There is no reason to expect a company's stock price to appreciate if earnings are flat or even worse, declining. Number 4, we want to see improving operating margins. Number 5, return on invested capital greater than 10%. And finally, we like to look for a company that has free cash flow as percent of sales over 10%. Free cash flow is important. This helps drive future expansions, dividends, and paying down future debt. So I hope this helps. Utilize this method the next time you find yourself analyzing a stock. Remember, don't overthink it. If you can recognize evolving economic trends and use your 5 senses, you'll pick some great stocks. Visit our website, robinhoodstrategy.com, and sign up for our newsletter. We don't think investors should have to pay hundreds, if not thousands of dollars to follow a newsletter. Remember to subscribe to our YouTube channel and follow us on social media. Thanks for watching.